Good Tuesday morning on Wall Street. I'm Yahoo Finance Executive Editor Brian Sozzi. This is Opening Bid. What is not to watch out there? I'm keeping an eye on Bitcoin in the AI trade this morning for good reasons. The volatility in Bitcoin is still helping to drive market sentiment. Meanwhile, OpenAI just sent out a new warning to its rivals after falling behind in the AI model race to Google. It's been fascinating to watch the past week of that back and forth. Let's get over to the NASDAQ though in Times Square and check in with Brooke DiPalma. Brooke.
Good morning, Brian. All three major indices looking to regain footing after major losses on Monday's trading session. We have the NASDAQ, Dow, and S&P 500 all opening in the green this morning. Let's take a look at the YF Interactive because the NASDAQ is leading the gains this morning, up nearly 0.5%. That's followed by the Dow, up about 0.3%, and the S&P 500 also trying to regain its footing after losses on Monday, up about 0.3% as well. But I do want to take a look at some of our top stories today, and that is the fall off of cryptocurrency, now seeing some momentum in the early trading session today after Bitcoin fell below that $84,000 threshold on Monday's trading session. We're now seeing a bit of a pop at the open, up about 3%, regaining momentum, but still far behind where we were just a month ago, also where we were just a couple of months ago when Bitcoin crossed $126,000. We'll definitely be talking a lot more about that as other cryptocurrencies are in the green this morning. But keep in mind, Monday's trading session for cryptocurrency was the worst day that crypto has seen in months. I do want to take a look at crypto stocks as well because they are opening in the green after seeing a bit of a sell-off as well on Monday. We have Strategy, which got so much attention yesterday. The company even saying that it's building out a reserve of about $1.4 billion. We are seeing some momentum there, up about 4.5% in the open after that sell-off yesterday. Other names in the green as well includes Robinhood and Coinbase. I know we'll talk a lot more about that, but taking a step back, looking at the NASDAQ, a big reversal from what we saw yesterday. Apple, Google, Amazon, Meta, Tesla, Nvidia, all opening up in the green, and Palantir seeing one of the biggest gainers so far today, up about 2.6%. And so definitely the market really trying to regain its footing here after those losses on Monday, with all three major indices opening up in the green.
All right, thanks so much, Brooke. Really appreciate it. Here's what's on my watch list right now. Crypto winter vibes. The Bitcoin bulls are getting inundated with calls for a new crypto winter emerging. How bad could it get? Are these fears just totally overblown, set against a backdrop of big-time Bitcoin volatility? We'll chat it up on the opening bid roundtable this morning. Sounding the alarm bells, with Google being showered with love for its new Gemini model, OpenAI CEO Sam Altman has issued a code red warning to his teams. In other words, he wants them to pick up the pace on development for ChatGPT and pummel Google into the ground. Is this ultimately even more bullish for Google? We'll also dive into this one. And buy or sell Apple stock. Apple's AI chief is departing after he couldn't get the job done on overhauling Siri and coming up with a convincing AI strategy to appease Wall Street. This could be further signs Apple's falling way behind in AI, and its stock may not be such a great buy into 2026. Here on the opening bid roundtable today, Tom Essaye, Sevens Report research founder, alongside Yahoo Finance senior reporters Brooke DiPalma and Ines Ferré. Starting on crypto, Tom, and I'm starting with you here. I enjoyed your note this morning. You broke down very clearly why you think we are seeing this volatility and ultimately this sell-off in crypto prices. For those that didn't get your note like I did, break it down for us.
Sure, Brian. Thank you very much for having me on. Essentially what we're seeing in crypto is that it's revealing itself to still be just primarily a speculative asset. I think with all the positive headlines we've heard on the policy front over the past year, including, a very pro-crypto administration and more people buying crypto by ETFs, companies having crypto on their balance sheets, I think a lot of investors thought that it's maturing beyond just a speculative asset, but it's not there yet. And I think that what we're seeing in this 30% decline from the highs is, there's no there, right? There's no specific event that's caused this. There's no dramatic change in the narrative. The bottom line is the only reason to own Bitcoin and crypto in general is because you think someone will pay more for it tomorrow than you bought it for today. And if that opinion changes, then down it goes without a lot of support. So over time, is crypto maturing? Absolutely. Is it becoming more fundamentally demanded? Absolutely. But it's still very early in that process, and it's still a wild ride as we're learning.
Tom, if we are headed towards a crypto winter, and if you think that is in fact the case, how low could Bitcoin go and why?
Oh, I think if we see a break, below 80,000, I think kind of a trap door opens on this thing, because in the end, we've had a lot of sort of late hands come in recently, especially with the advent of these ETFs. If you see investors start tax loss selling into the end of December, then I think you could easily see this, go down into the 70,000s or even the 60,000s very quickly, possibly, before year end, if you get a lot of heavy tax loss selling, because again, there isn't a ton of fundamental demand to show up. And so it really could get ugly.
Brooke, on the positive side, getting some news out of Bank of America that I know you're following on their crypto efforts.
Yeah, a vote of confidence from Bank of America despite this crypto sell-off that we've been seeing over the past month. Bank of America now recommending that clients allocate about 1% to 4% of their portfolio with crypto. And that definitely is a vote of confidence from one of the biggest financial firms. Of course, would be interested to see where exactly this ends up going in 2026. But some of the ETFs that will include, they said starting January 5th, the firm's CIO covered Bitcoin ETFs will include the Bitwise Bitcoin BTF, Fidelity's Wise Origin Bitcoin Fund, Grayscale's Bitcoin Mini Trust, and BlackRock's iShares Bitcoin Trust as well. And some of these have definitely seen, some momentum at the open after this major sell-off. But the fact that a financial firm is giving this vote of confidence despite this sell-off and really sort of hinting that this is the future, that investors should make this part of their portfolio strategy, was definitely a vote of confidence that it seems like the market needed right now.
Ines, where are all those folks that said crypto was like gold? Where are they?
Look, you've got Wall Street that is expecting some volatility over the next couple of weeks. There's some ranges that are being talked about. As Tom said, if it breaks below 80,000, it could well push below 75,000. There's some ranges anywhere between 70 and 100,000 to the end of the year. Certainly the fact that you had ETF outflows posting their second worst month in November on record is not bullish for crypto. Fund managers may have been just trimming positions and going into stocks instead of crypto. But nevertheless, there is an expectation that 2026 could be different, particularly if there's a new Fed chair, particularly after this, if there is a 25 basis point cut this month. What will be the narrative going forward? Will there be a pause? That would not be bullish for Bitcoin, but if you do see sort of a regime change next year, if Hassett is placed as the Fed chair, Wall Street is expecting this to be a bullish sign for crypto in general.
Tom, outside of this sell-off in crypto just bothering me, it is keeping me up at night because this crypto trades around the clock. It is AI, and we awake to story today that OpenAI CEO Sam Altman is issuing some form of code red warning to his teams, basically wants to pick up the pace on development. What bothers me here, Tom, is that this company underpins the AI trade. It's linked up with AMD, it's linked up with NVIDIA, and if OpenAI is going to fall behind here, what does that mean to the broader AI ecosystem and the various trades that investors have fallen in love with?
Brian, you have hit the nail on the head, and this is what matters to investors in this story, right? The Google Gemini AI model is a huge deal because it threatens to make OpenAI and ChatGPT substantially less relevant. And here's why that matters for all of us. ChatGPT, OpenAI, has committed to spending over $1 trillion in the coming years to fund data center build out. If all of a sudden their revenue prospects dim because Google, which already has a presence everywhere, is going to become the dominant AI model player, then the outlook for ChatGPT just got a lot worse. That means they're not going to have the money to fund all of these commitments they've made, commitments which stocks have already rallied on. So if OpenAI, this is absolutely code red. This is code red for OpenAI. It's also code red for the AI enthusiasm trade. We need to see ChatGPT step up. Otherwise, it's not just OpenAI in the private market that risks dropping a lot. It's the whole AI ecosystem, and that would be a problem for the S&P 500.
Tom, if this is in fact code red for the broader AI ecosystem, I'm going to assume that a lot of people have already missed a pretty substantial move in Google. I'm going to swipe it off to the side for a second. Is this the moment where you go back to a name like Meta that is not reliant on OpenAI, that is spending billions of dollars on CapEx? The street didn't like that a couple weeks ago when they reported earnings, but here's a company growing its core Instagram business, Facebook, and going to be a major player in AI and doesn't necessarily need an OpenAI.
Yes, I think so. And that's what I think, again, this is such a big deal with Google stepping out with Gemini, is that you look at these well-capitalized mega cap tech companies, they don't need to worry about finding funding to pay for all the things they've committed to. They can do that from cash flow and from a very, very favorable debt market. So I do like Meta as a tangential from a Google.
Ines, over to you. What concerns me here, amongst everything that I was just mentioning, is a company like AMD. They came out a couple months ago, signed a big deal with OpenAI. The stock shot up. Immediately you thought AMD is going to be raking billions of dollars from OpenAI. They're also going to have an investor in the form of OpenAI. I believe it's a potential 10% stake over time. That bothers me. If OpenAI can't deliver right now, if you're an AMD shareholder, you got to be quaking in your boots.
Yes, and look, when you saw that the stock reaction when the report on the Google and Meta potential deal with their TPUs, the Google AI chips, you saw that NVIDIA fell on that day, and AMD did as well. The fact that you have Alphabet or Google that is it has its TPU chips, which they don't necessarily, okay, fine, they don't compete directly with NVIDIA's GPUs, but certainly this is sort of a diversification play for them. And the fact that you also have their Google Gemini, which has been integrated into Google. What's very interesting is that the street had been concerned that ChatGPT was going to displace Google search, yet Google was able to integrate Google Gemini into its Google search, and it still has the best of both worlds, because if you're going to use Google search, you're going to probably use it to look for a local handyman, right? And that still goes with their ad part of their business. But with their Gemini, you're looking at it for more deep research, for more helping out with term papers, whatever that may be. But nonetheless, this is Google firing at all cylinders, and this is sort of having a ricochet effect on the rest of the AI players.
Brooke, and one company that's not really even in the AI discussion, it's Apple, and they're shaking up their AI team. Shocker that a bunch of well-paid executives trying to figure out AI are not being shown the door. They have just not got it done. The street does not yet believe that Apple will be a major player in the next decade of AI.
Brian, Apple's one of those players that has really fallen behind this AI trade, this AI revolution, this momentum. But now this might be a turning point. They just hired a new leader who's going to oversee their AI strategy. And keep in mind, this executive came from years of overseeing Google's Gemini. And now when you take a look at Apple stock, it's trading at an all-time high. And there definitely is just a bit of optimism there that Apple's finally getting into this race as well.
All right, Tom, Brooke, and Ines, stick with me. Much more to get to on this show. Coming up, Coinbase may surprise the market in a few weeks, and we go hunting for big risks to the AI trade beyond what we just talked about. We'll be right back. All right, I'm staying with the crypto theme for my stock of the day, which is Coinbase. Coinbase shares have dropped 25% in the past month as Bitcoin prices have fallen off a cliff. Stock now trades on one of its lowest forward price to earnings multiples in the past 3 years, according to Yahoo Finance data. But I think the market could be positively surprised by Coinbase in just a few short weeks. And if it is, you can roll this tape back and send me a thank you note on X. Coinbase will be holding an event on December 17th where it's expected to unveil 2 new products that could boost earnings power over the next 12 to 24 months. The first is tokenized equity trading and the other a prediction markets product. Let's get some hot takes from the roundtable on Coinbase. Tom Essaye, Brooke, DiPalma, Ines, Ferré. Tom, you think the market has completely forgotten the potential for Coinbase and it's just wrapped up in what could be an ugly fourth quarter?
I think that's part of it, for sure. I mean, while Coinbase has certainly benefited from the Bitcoin and crypto ETF explosion because they are a custodian, right? I think that they've lost some of the marketing pizzazz as well, and I think that's hurt them. overall this year. And of course, they're getting wrapped up in what's happening in crypto right now. But I like your take on this. And the reason I like it is because Coinbase is innovating. Prediction markets are very hot right now. They seem to be everywhere in the financial media. And I like the fact that they are striking out in that way. We got to remember, Coinbase still has a really positive asset in that it has a lot of crypto-focused investors that it can tap through these products. So the innovation, I think, is important, but the overall business model remains sound. And beyond the short-term chaos we're seeing in crypto, I think most everybody would agree that demand for this as an asset is only going to continue to rise, as evidenced by Brooke's story earlier today with Bank of America. People are going to be including this. Coinbase does ultimately benefit.
Ines, I was hauling ass over to the makeup room prior to the show, checked my phone, got a message from Kalshi. Today being valued, they raise $1 billion and $11 billion valuation. And I look at Coinbase, and I don't think the market has priced in anything they could be doing in the prediction markets.
No, they're not. I mean, and that's why you have Bernstein that has a buy rating and $510 price target on the stock. Prediction markets is the hottest product right now. You saw that Robinhood is leaning further into prediction market. It's their fastest growing product right now. So for Coinbase to be launching some type of offering with prediction markets, that's huge. The fact that tokenized stocks, another growing sort of a sector of the crypto space. It's really traditional finance going on chain, and this is part of the progression of what's happening with tokenized stocks, et cetera. What's interesting is that Bernstein has this note out, this very bullish note on this, basically insinuating, look, this is going from a more crypto volatile trading platform into sort of an everything app, which is it's on par with what Robinhood is doing as well. So that's their big competitor, really, when you look at this space, because they're going to be offering everything and anything. Again, all part of this traditional finance going on chain eventually.
Tom, you've been doing this for a hot minute. Can you believe the excitement and just the businesses that have sprouted in terms of the prediction markets? You have 60 Minutes this past weekend profiling Polymarket. You have Kalshi out today with an $11 billion valuation. Coinbase looking to potentially get in the field. I mean, there's a whole industry that has been created here seemingly out of nothing.
Brian, I can remember 20 years ago now, which is upsetting to say, walking into the New York Stock Exchange, and there was a small website called betonsports.com that didn't just offer betting, it offered betting on anything. In many ways, it was kind of the original prediction and later became beton.com. It's amazing that this has now exploded in this way. I mean, those of us in the markets have been using these prediction sites for a long time, especially for politics. But now it's really out there, and the number of companies that are capitalizing on it and the demand exponential growth is really substantial. And I don't see anything to stop it because people seem to love this stuff.
Indeed they do. All right, while Bitcoin's awful few weeks have weighed on market sentiment, the reality is that it's the AI trade that still is the main market driver. And when it comes to AI, some of the biggest and brightest minds are focused on one thing: energy. Microsoft CEO Satya Nadella said as much on the MD Meets podcast.
It needs to result in that economic growth that's broad spread in the economy so that we have the social permission to consume energy. And then, to your point, we need the innovation in the sources of energy. We need innovation in how we utilize it with the best, I'll call it, power efficiency.
We might argue with Satya, but I'm going to try to. So I want to put this question to the opening bid roundtable as we think through the risks of the AI trade next year. What's the bigger risk? Surging energy costs for power-hungry AI companies, or a turbocharged Google now leading the AI model arms race? Brooke, over to you.
I would definitely say that that energy for these data centers is definitely the biggest risk here. That's something we've been talking about it. And just to put this in context, when you think about these companies and just how much money that they're spending in order to build these out, in order to fund these sort of demand. For example, Microsoft's CapEx is now 25% of its revenue. That's about 3 times more than where it was about 10 years ago. And as we make our way into these next few years, I think that is the biggest question, to bring it back full circle to what we were talking about at the top with OpenAI, they're putting lots and lots of money, teaming up with mega partners in order to see this come to fruition. And it just doesn't feel like we're there yet. And we're putting a lot of money into building out. And so data center, the energy required to fund these sort of initiatives is definitely what has me most worried about this AI momentum.
And as you cover the energy space for us, where are we getting all this energy from?
Well, nat gas, you've got the nuclear, you've got solar. I mean, but it's certainly, look, the bottleneck is the same for everybody. So it is the energy sources and what that will mean for energy prices as well. And also water for cooling the data centers as well. So I would say, I would agree with Brooke, and I would lean on energy being that bottleneck.
All right, we got 2 for energy. Tom, over to you.
So I'm going to disagree with the ladies, which I don't like doing, but in this instance, I actually think it's that Google becomes essentially the dominant player.
I'm with you, Tom, but go ahead, Tom. I'm with you.
So here's why, right? So if Google becomes a dominant player, then what that risks is that OpenAI becomes this generation's version of Prodigy, which you got to be pretty old now at this point to remember Prodigy, but it was the first mover in the internet email space in the 90s, and also MySpace, which was the first mover in social media. Most young people don't know those 2 companies because while they were the first movers, they ended up being offset by later companies. If the problem now is that Prodigy and MySpace didn't commit to spend trillions, right, in the broader economy. So if Google becomes the dominant player, then you see a lot of these fringe AI companies probably go away, and along with them going away, so too do some of their power demands. It reduces the overcapacity risk. So I think that Google becoming the dominant player would actually be the first domino to fall. And if that occurs, then you actually don't end up having all this power demand that we're worried about right now.
I really, really miss MySpace. Inez, Tom's a nice guy, but you could fire back him if you want.
Wow, Tom is Throwback Tuesday with MySpace and Prodigy, throwing AOL in there as well. That's an interesting point. I see Tom's point on that. I don't know if I agree with the point, I guess, in that respect, if you put it that way. But nevertheless, I think that there's going to be more players than just Alphabet or Google. So the energy theme will still play out, in my view.
I can't help myself. Brooke, real quick, you never even used MySpace, right?
Oh, I sure have. How old do you think I am, Brian? I
wasn't going to ask. I was just making a statement. I wasn't going to ask.
2013 or something?
I do have to say, though, Google Gemini last month, it actually surpassed foot traffic compared to OpenAI. And so, Tom, great point there. Definitely a fear. When you think about what people generically go to for their search platform, I mean, it typically is Google. I don't know of many people going to Firefox these days. And so when you think about just the innate nature of users to go to Google, definitely a good point there. And definitely will have to talk to my friends. Maybe I'll hit up some of my old friends on MySpace to get the dish.
I just want to get this on the record. I only use Yahoo Search. That's all I'm saying. A big thanks to Tom Essaye, Brooke DiPalma, and Ines Ferré. Appreciate it, y'all. Straight ahead, Julie Hyman has you covered on Market Catalyst. I'll be back on with Julie in 15 minutes for a chat with Signet Jewelers CEO J.K. Samancic. The owner of K, Jared and Zales, posted better than expected earnings this morning, but did warn in the earnings call just now they are seeing softer traffic this holiday season. We'll be right back.